Welcome back. You're listening to the weekend edition of the Cortland Economics Report. I'm Al Cortland. Appreciate you joining me. Most of this program, 7 of the 8 segments anyway, that's most of it, are originating here from Spokane, Washington. We're at the Silver Summit. Got to admit, Mr. Silver Investor David Morgan is a really, really interesting man. I've got another very interesting guy with me right now, Greg McCoach. Greg is very, very insightful. Has a great newsletter called the Mining Speculator. I don't play golf with Greg anymore because he generally kicks my you-know-what, but he's a good friend. Greg, in the first segment, we talked with David Morgan about basically macro issues. We talked about silver, we talked about gold, et cetera, but what most of our listeners are really interested in right now is, okay, what's the direction of the mining stocks? Now, my portfolio, which I just checked yesterday before I flew over here, we're down about 30%. What's your outlook for the mining sector?
Yeah, in the short term, obviously, we're in a brutal time frame that's, I think, going to get actually a little bit worse before it gets better. I'm telling my subscribers to just stay the course, okay? You can't get panicked and sell at these low levels, all right? What we're going to probably experience in the next few months is a heavy tax loss selling season. You have a lot of investor fatigue with the juniors. You have a lot of people who have been holding stocks for quite some time are getting tired. I think this year, some years are worse than others for tax loss selling. I think this year is going to be a bad one. So our mining stocks are probably going to dip even lower here between now and the end of the year. After that, I think things will start to become buoyant again. I'm sure that precious metal prices are going to be rocketing to a new high within this time frame. So I think after the tax loss selling season's over with the higher metal prices, the events of QE3 in place, I think the mining stocks come back, first quarter and into second quarter next year.
Well, here's an interesting question. I talk about the fact that I think that the decoupling that's existing between the price of the metals and the mining stocks, my comment a few months ago was I think that decoupling is going to eliminate itself. Now, I've had listeners, as recently as last week say, Cortland, you were wrong. The decoupling is very definitely still there. I guess it is. You look at paper, you certainly can't dispute numbers. Right. But the fact of the matter is, I still feel very, very comfortable in mining stocks.
Absolutely. For me, my mantra, like I said earlier, was own the physical precious metals as your ultimate bank account. That should be your bank money, because banks are very risky at this point to keep U.S. dollars or Canadian dollars or European dollars in any of those banks. They're all in trouble, right? And these problems are going to start to come out. But also the combination of owning the physical metals and the combination of owning the quality precious metal junior mining stocks, to me, makes the most sense. You have to stay the course. It's not going to be easy. You have to understand what you're doing, right? You have to have confidence in what you're doing. If you don't have confidence in this type of volatility, you're going to get kicked off. You're going to sell out at the wrong time. What I try to tell people is to get educated about this market. Do your homework. Understand like I do. I'm so confident about it. I've been confident for many, many years. Gold keeps going higher and higher. It will continue to do so. Nothing's going to stop that in the longer term. Sure, governments tamper with everything. They're going to tamper with the metals markets from time to time. They have a short-term influence to the downside. Doesn't matter. Gold and silver will pop right back up and make new highs. That's coming as sure as death and taxes. So as that happens, sooner or later, the value of the mining stocks, the quality companies that have the real assets in the ground or in production who are producing this stuff, investors somewhere are going to figure this out, and they're going to come running into this sector at some point, which will turn the fortunes for the juniors in a big way.
Well, I think what's interesting, is you're seeing ads in the daily papers now, you're seeing ads in all the magazines, you're seeing ads on television, buy gold, et cetera, et cetera. So the general public, those ads aren't there because the advertisers just want to throw money away. Those ads are there because they know that there's an audience for that right now. Well, the logical next step, at least in my mind, Greg, is that people will then diversify to an extent by going into the mining stocks.
Right. There's a gigantic retail sector out there that could come into the market. What's always been a boon to our market, up to this point in the last 10 years has been the big funds, the big hedge fund money, right. Index funds. When those people come into our market, they come in big. And, they buy big, but they also sell big. And that's why our market's always volatile, because that big money comes and goes. They're very fickle. It would be nice to bring in a new group of retail investors, and I think that day is coming. We're not there yet.
You know, I think you're right. I think that day is coming, and I am surprised, quite frankly, that that day hasn't arrived already. And the reason I say that is the companies that I'm invested in anyway, and don't take this as investment advice, you guys, because it's not. I am not an investment advisor, neither is Greg. But the companies that I am personally invested in, you couldn't get sounder fundamentals. And after 30 years, I know a little bit about fundamentals.
And some of them are trading for cash right now. So
or less.
Or less, right?
It's amazing, yeah.
So that's a good value. That value, usually when you see a situation like that, it always works itself out. So as an investor, you buy when there's blood in the streets, the news is bad. This is the essence of being a contrarian investor. This is how you make the most money as an investor.
No question.
Buy low and sell high. But you have to be willing to buy when the news is bad, and that's hard for most people to do.
It's hard for most people to do, but those of us who've been around the block a couple of times will do it. What's your time frame for a rebound in the mining stocks?
You know, it's hard to say because there's so much going on. Right now, the U.S. government and through the Federal Reserve is trying to reflate itself again, reflate the world economy, the global economy, with a QE3 event now. QE3, creating money out of thin air, electronically pumping it into the system, hoping for a different result. Well, what drove gold prices to $19.29 and silver to $49.50 in this last run-up earlier this year was the combination of a QE2 happening and the problems in Europe.
I'm with you.
Now we have QE3 and problems in Europe still coming.
And soon to have more problems in the United States.
That's right. So what do you think is going to happen? Gold and silver prices are going to run up. And at some point, as banks start having problems, there's probably going to be some rogue event that governments can't stop from coming, right? They can put Band-Aids on all these other financial problems and kick the can down the road another few weeks, few months, whatever. But we're getting to the point where we've gotten to the dead-end alley, and there's no place to kick the can anymore. And this is where this big fundamental change is going to happen, and you're going to have people flock into anything related to precious metals, stocks, physical, ETFs, whatever.
No, I agree. I agree 100%. I don't really think there's any question about that, actually. And, you know, timing might be off, but I made a couple of predictions on the record just recently. 2 weeks ago, I said that I felt that gold was going to go gold. And I didn't mention silver, but I said I feel that gold will be in a general uptrend. Okay, and we've had our hiccups since then, up and down. But the fact of the matter is, if you look at the price of gold 2.5 weeks ago compared to the price of gold today, we're higher today than we were then, in spite of the gyrations that are going on in the market. Last comment, we got about 30 seconds left here. In terms of silver, Clive Mond is saying 20 bucks an ounce. I violently disagree with that. What do you think?
I think in the short term, it's very possible because you have government tampering.
Okay.
The government is tampering with the markets in a big way. It's totally corrupt and illegal behavior, but they do that. Regardless of this, my statement has been over the last couple years, we're coming to a point where we're going to see extreme volatility in the precious metals. You might see extreme volatility to 20 bucks, but then you'll see 3 months later it's at 60 bucks. So this volatility is going to be part of our market from here on forward.
Yeah, I would agree. It's a very interesting time. There are so many people involved in the pricing structure, you really don't know which way to turn. Hey, if you want more information about Greg's newsletter, The Mining Speculator, click on the banner. Greg, it's right on our homepage. Big Al's going to be right back.